Hi, if this video has helped you in any way, kindly take a second to show your support to what we are doing for you. Be part of the growing Accounting Made Simple family. Click subscribe, like, share, and comment, and hit that notification bell so you're always first to know when new content drops.
Today I want us to solve CPA 1 Financial Accounting Theory question, which was tested in April 2022. Question 1a. The question reads, highlight 5 elements of financial statements. These elements are defined by the Conceptual Framework for Financial Reporting, issued by IASB. They are 1. Assets. These are resources controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. Example: buildings, machinery, cash, receivables. Some students think that assets are resources purchased or owned by the organization. This is not necessarily true, as you will learn in financial reporting. Some assets are leased for a long period of time and are recorded in the balance sheet, although the legal documents like title deed or logbook still read other parties. The same case applies to assets purchased on hire purchase basis. Hey professionals and future professionals! If you're preparing for your next exam or sharpening your accounting skills, and if we are adding value to you, please make sure you don't forget to subscribe, like, share, comment, and turn on the notification bell. Your one click greatly supports us and helps spread knowledge and inspiration to the world. Your success journey continues right here. 2. Liabilities. These are present obligations of the entity arising from past events, the settlement of which is expected to result in an outflow of resources embodying economic benefits. Example: loans, creditors, tax payable, interest payable, trade payables, and bank overdraft, among others. 3.0 Equity. This represents the residual interest in the assets of the entity after deducting all its liabilities. We get equity by deducting liabilities from the value of the assets. Thus equity equals assets minus liabilities. Example of the elements that in total gives us the equity are share capital, retained earnings, share premium, revaluation reserve, general reserve. 4.0 Income. Increases in assets or decreases in liabilities that result in increases in equity, other than those relating to contributions from owners. Revenues are what the firm has earned, whether received or not, either from the principal revenue-generating activity or other sources like gain on sale of non-current assets, interest income, dividend income, discount received, etc. Any reduction in liabilities by the owners becomes an income to the firm. 5.0 Expenses. Decreases in assets or increases in liabilities that result in decreases in equity, other than those relating to distributions to owners. Example: depreciation, salaries, rent, cost of sales. Expenses are resources which are used up in the course of business. They are incurred, whether paid for or not paid for. Hey professionals and future professionals! If you're preparing for your next exam or sharpening your accounting skills, and if we are adding value to you, please make sure you don't forget to subscribe, like, share, comment, and turn on the notification bell.